TGIF Warriors. Just kidding. Anyone else it feels like Friday too? Hi Zig, everyone doing okay? Good morning, Dave and Craig. So I'm looking at this euro and we did have a non-confirmation here. It's not classic because we didn't take out this low, but sometimes twos work. And I just look at this from the ECB, 320 pips. The euro has lost. Getting some non-confirmations in the dollar up here. See this? Almost looks like a 3 here. 1, 2, 3. Some non-confirmations here. Could go again. I would just be pretty careful being long the dollar. Although I do still expect when you look at the daily, after we get some type of pullback here, maybe one more above 96 to 97, I would just be a little bit careful here pressing alongside the dollar. The gold looks a lot like the euro, where it was almost a 3 drive to a bottom formation, but it ended up, see this, 1, 2, and putting in a reversal candle here. Why can't we rally back to this breakdown? So that'd be good for 12 bucks. And again, the euro, I don't think it would be unreasonable for us to get a rally back towards, 1680 again, or you just look at the 1 hour and halfway back is going to take you up near 117, which was a pretty important breakdown after the ECB. That's the way the dollar looks to me. A little different character in the S&Ps. We were down sharply 2 days in a row, and they brought it back both days, right? So far, held that break. This would have been a false breakout, but they brought it back. But a little different action today. Actually, your strength, which has been the weakness all the way down, is the Dow. It's up the most percentage-wise, more than the S&Ps. And when I look at the S&Ps, this could be a failing rally. We did confirm this low. And if this was a pretty good break, I'd call it, what was it, about 60 handles. Yeah, 60 handles. We're about 61.8 back. So if we had 1.618 of this from in this zone, that'd take us down to about 2660, which I kind of have this broadening top formation here for maybe a pit stop for the S&Ps. Well, it's not the way I wanted to do it, but you can get the gist of what I'm talking about. Also, everyone's going to be paying a lot of attention to the 200-day. I don't have it up here. Also, what was very clean, and it's pretty high conviction to me, is what happened in the yen. So this is what happens, selling rallies all last week, taking scalps, get flat at the end of the week. The way the S&Ps closed and the yen closed, it looked like there'd be, no problem, maybe even up here to have a short. And then when you're sleeping in Asia, this happens, and then you feel like you have to chase it. We have a rising wedge that we had a breakdown on, and it looks like it tagged it. To me, it looks like it tagged it up here at 25. So if this is just a little flag or pennant off a straight line move, 130 pip move from here is going to take it down to about 870. So yen looks pretty vulnerable to me. Okay, so that's another sign that maybe the dollar is going to, correct a little bit here. So those are my thoughts. And here's a NASDAQ. This could be a failing rally too. It led it all the way. So I'm conflicted. I thought we might have one more high, but if we fail from here, I think the high may be in until early next month at least, where we get some type of low. It was Mark Newton who talked about the intra-month pattern. that we've been having, and that was for highs in the indices mid-month and lows at the beginning of a month. So if we're getting a high here around a little later than mid-month, actually this was, the beginning of the month. This was mid-month. So we could head down into the 4th of July holiday. We'll see what happens here. And we do have a FX trader that's going to be with us for an interview today. I believe his handle's at, let me look it up here again. I think it's FX45. Wasn't that a gun of 45? Let's see. Steve at F45 Trading will be with us. So stick around for that. I'm going to be very interested to see what the guys are saying, but the end's probably my highest conviction trade, breaking down out of a rising wedge. There's lots of counts. You could have something like this from here. Greg is on the same side of the market. He's been short for a long time, survived this rally. Haven't looked at any other patterns in play here today. Great call by Blake in the peso. So, wasn't exactly the top. We didn't get to 2107, but very nice trade. Called it out live yesterday. Knowing Blake, he's probably taking profits on a short MEX. Do I know you?
I actually did take profits yesterday. I shorted it twice yesterday, actually. So.
Oh, you action junkie.
Yeah. I'm torn. With the U.S. dollar Mexican peso, because I'm bearish the dollar peso, yet I'm bullish the dollar Canadian. And although I took my dollar Canadian longs off yesterday at 132.75 after being long at 130.60. So it was a couple hundred pips in the dollar Canadian. I still think the dollar Canadian looks extremely bullish, and that has me conflicted
cautious
shorting. Yeah, when shorting the dollar peso. So I'm just I'm a little hesitant. Although the dollar peso still looks like it's going lower. And I don't know what to do with the dollar Canadian right now. I think it looks so incredibly bullish at the moment, the dollar Canadian, yet I'm not long. I'm still hoping for a pullback. I'm hopeful that we get a pullback, but man, the pair does not want to come down. And
did you see some of Greg's long-term targets in Canada?
No, but no,
they're up there, buddy.
Oh, I'm sure. I mean, I look, any dip to 132 and I have to get long, and I expect a lot higher, 136, 139, 140. I mean, you name it. I look at much higher levels as long as we stay above, especially if we stay above 131. But at the same time, I am not long the dollar Canadian, and I'm a little nervous not being long it. So
you'll have a chance. Doesn't it look like it's grinding out? I mean, the character of the rally, say the last few days, is a little different than when it's like straight lining. Maybe we're due for it. Maybe you'll get that chance down here.
I'm hoping so. And the daily sentiment index registered at 7 for the Canadian, which is extremely bearish, and I mean, it's super extreme. So and that's my biggest hesitation. Well, there's a couple things. I mean, what I'll do is I'll just show you.
Okay.
On the
Trump actually made a statement saying, we could negotiate separate trade deals with Canada and Mexico when someone asked him about NAFTA.
Yeah.
So he doesn't care if NAFTA gets done. It almost seems like he'd prefer it not get done.
Well, I think he doesn't mind playing hardball right now. So, for him, it's whatever is going to be best tailored for those two particular countries. I think he doesn't he doesn't mind. But as far as there's still lingering auto issues with Mexico, which is where a lot of car manufacturing is done, is in Mexico.
American car manufacturers went down there.
Yeah, but the flip side to that is that you have this big tussle between Canada and the U.S., and especially with pretty offensive language coming from the U.S. Towards Canada. So it's still gonna be very interesting. But I look at the dollar Canadian, and see this blue line right here. That's it. I mean, as long as we stay above that, I want to be long. What I'm hoping for. What I'm hoping for is this. Whoops. Yeah. What I'm hoping for is this, and this, and it may not even be that deep. I'm just hoping that at some point we're going to get some sort of pullback. So Dale, I want to talk about a couple of things. First of all, if you guys aren't watching the Morocco Portugal game right now, Ronaldo just scored within like the first 5 minutes of the match. So that was, we were all, if you're new to currency trading, let me just tell you, every 4 years when the World Cup's on, it's like you want to kill FX volatility. Just when the World Cup's on, it kills volatility in the FX market. Every World Cup tournament. This because soccer or football, if you're not in the United States, is the
it's not football.
I know it's not American football. Look, but it is the most popular game in the world.
Let's call
Here we go.
Let's call football the sport that is actually not played by a ball and which you strike by foot like a couple of times per game. And let's call something else a game that is only played by using your foot and actually kicking a round ball.
You asked for it, Dale. You asked for it. You asked for it. See,
Wow.
you start provoking the Europeans, and you're going to get it. You asked for it.
They all need to hit the weight room. That's why they only use their feet.
I don't watch soccer.
Yeah,
Steve, I don't watch soccer that often. Although I'll go to a match every once in a while. Here in Phoenix. But I'll tell you, it's captivating, especially when you have the whole world watching right now. So, and like I said, that was a quick goal by Ronaldo, and obviously all the ladies are watching him this morning. I say this.
Ronaldo is on fire already, like 4 goals within 1.1 games.
It's crazy.
Yeah.
He's amazing, man. He is definitely a anomaly in the game for sure.
Yeah, and keep in mind that he's more than 33 years old, so that's something extra.
It's fun to watch. Fun to watch him. Anyway, that's number one. Number two, we have a huge vote this morning out of the UK. So we have, and I need clarification as well. I mean, I'm going to give you guys the best information that I have. But first of all, there's the meaningful vote is happening today at 9:30 Eastern is when they expect earliest to voting to start. So that's like an hour and 15 minutes from now. Talking about an hour and 15 minutes to 2 hours from now, the meaningful vote is happening. Now, this is an important vote because this is basically a vote whether May has negotiating a stronger negotiating stance or not. Okay, so Parliament, is Parliament going to get final say or not on a deal that Prime Minister May brings back from Brussels? That's the key today. So, there's a couple school of thoughts. If the government or Prime Minister May loses the vote, okay, a lot of people think that that would be bullish to cable, because this way Parliament would have the ability to vote down any deal that May brings to the table. Okay, so they feel that, okay, this won't be a hard Brexit no matter what, because you're going to get Parliament approval. Being able to, put their foot down and say, this is not a good deal for us. If the government wins, then, it doesn't matter what May brings. She whatever it is, hard or soft Brexit deal, the UK is going to have to live with it. Now, again, there's a couple schools of thought here, because if she does lose, the government loses, does she then at that point in time, is it really good for the cable, or is it bad for the cable? Because then she may not have bargaining power, because the EU negotiators will say, well, it doesn't really matter what happens here. It's ultimately up to the Parliament. So, she may not have much negotiating power if she loses this, or the government loses this vote today. But the flip side is, if she does win, or the government does win, then she could bring back any deal. She could negotiate a hard Brexit, and the UK is going to have to live with it. So it's tricky. I'm not sure how the market's going to interpret this vote, but it's going to be critical. And so the point I want to make here is that here in the next hour to 2 hours, we have to be really on guard watching the cable. And there's different schools of thought, and I don't know what's right. I don't know what's right and what's wrong, and I don't know how the market's going to interpret all this. But the point I'm trying to make here is that the pound is going to be in focus over the course of the next couple hours. So that's number one. And you guys are going to have opinions. Look, if I go over to the Q&A panel right now, Amanda says it's at least 5 hours away. See, I was reading on that voting could start as early as an hour from now. That's what I read. But Amanda, who lives in obviously is in the UK, says they haven't even started debating yet, and it votes at least 5 hours away. So we're talking later tonight in the UK. So that's good to know. Doesn't mean I won't be watching it, that's for sure. Andy says vote today, Carney tomorrow, now Daily 50 back, and Portugal winning 1-0. Yes. And let's talk about the cable really quick, since that's so much in focus. And for today, it's a summer day. We've got the World Cup going. As you saw yesterday and the day before, I mean, the markets are just dead. They are just dead. So I want to bring up a couple of things before I look at all the pound pairs, which I want to look at. So let me just talk about the yen first and foremost. The dollar yen has rallied back to the previous this underside of this trend line. I'm a little miffed at what I did here, because I was Dennis in the chat room. And here's the chat room. You guys can say hi, hello. You guys are all on. We have about 90 people in here right now. Jumbotron. You guys are on Jumbotron. Oops, here we go. Dennis asked me yesterday, hey Blake, are you going to short the dollar yen at 110.20? Because I was telling him last night, hey, I'm going to short the dollar yen when it gets back. We were here. This is a 4-hour chart. So we were here yesterday, and he's like, hey Blake, you're gonna, or we were actually below 110. He's like, you're gonna short the dollar yen back when we get to 110.20, and I'm like, yeah, I'm going to. And I actually had an order. To short the dollar yen, and apparently I canceled my order last night. I didn't think I did, but I must have, just as I was closing everything else down, I was just, like, get it off my screen type of thing, which is, okay, you guys have had enough fun. We'll see you later. Oops, hold on. I didn't think I actually I took my order off, and I'm a little upset that I didn't, because I actually did want to be short at 110.20, and then anyway. But the reason why I bring this up is because if you guys are bullish risk, the dollar yen's already signaling that risk might be a little tired here. So if you're long stocks or you're long equities, be a little careful, because I think the dollar yen looks like it's going right back down to 109.50 personally, and I'm not short. So that's something I wanted to mention. Now, if you look at the cable, let's look at the pound. So the pound had a bearish breakdown the last day. We broke through key support. One of the key components of the cable here is, let me just, I'm using the spotlight here so you guys can see this. When we dropped, we only came to a 24% retracement. That's a very shallow retracement, very shallow. Okay, double top, here's the neckline. Okay, double top targets, below 131. We had a 24% retracement, and when you have a 24% retracement, the reality is that we could have a continuation takes us down to the low 120s on such a shallow retracement. That's scary if you're long the cable. All right. I mean, and if you look at the dollar all the way around, it's, that's something that you got to really pay attention to. The pound bounce has been extremely, extremely shallow. All right. Now, the flip side is, like, later on this week, if we can close back above, let's say 132, excuse me. Sorry, I didn't mean to yawn on you guys, but if we can close back above 132, that would be a false breakdown. So obviously this 132 is going to be pretty critical today, tomorrow. So you can see 132, we're heading back up towards it. I wouldn't really pay much attention to it if we didn't respect it twice. Okay, we did. 132, 132. That means 132, 132 and change. Say 132.10 or whatever the case may be. Okay, so there's the pound dollar. That's why I think 132 is going to be important for today. Now let's take a look at some of these other pairs. Here's the pound yen. Just so you guys are aware, the pound yen failed at the underside of this trend line last week, and we're slumping again. The bear flag pattern's already, for the most part played out, but it still looks like we could see the 50% retracement, maybe even lower on the pound yen. So the pound yen doesn't look very favorable. You have the pound Aussie. The pound Aussie had a gravestone doji. So let's talk about this. Gravestone doji yesterday. I know we're up a little bit right now, but this is a very bearish wick this is a very bearish candlestick pattern from yesterday. Okay. Pound New Zealand, same. I know we're up right now, but there's a lot of time left in today. A lot of time. Okay. And a pound is pushing right up against previous support, which should act as current resistance. It has already. Pound Canadian. Now, pound Canadian actually looks fairly constructive, as all the Canadian pairs do. I mean, the Canadian just looks weak. You look at the pound Canadian or the euro Canadian, looks the exact same. But the point I'm trying to make, and then the euro pound. Let's look at the euro pound really quick. The euro pound's pretty much sideways, but this is the 200-day moving average right here. All right, so that's something to note, and also the 618 retracement. Now, and this is one of those things that you have to think about. If the euro pound breaks above, breaks above the, here, you know what? I've been using these last few days, so I think this is a good if you look at the euro pound, you know, that thing gets above the 618 retracement and the 200-day moving average, the euro pound's going to go higher. Again, that you should be watching alone if you're playing the cable, because if the cable does weaken, that euro pound is probably going to go a lot higher, especially if it starts breaking out. So for those of you that are bullish the cable, I think you've got your work cut out for you. A, B, you just need to watch all these prices, especially like the euro pound. I mean, because if this one really starts breaking higher, that's when you get a lot of cross rate effect. You know, that's when the cable starts getting way down almost across the board. If the euro pound starts really ripping, especially after being in such a tight consolidation for the last 7 or 8 months in this down channel. So anyway, in my opinion, those are some things that you need to be looking at if you're trading the cable. There's the most important thing to note is that there is a huge vote that's happening this afternoon, and there's a huge vote coming out which could actually very much influence the cable. I'm very unclear on the direction of the cable based on the vote. Like, I don't know if government wins or loses, how the pound is going to react, or better yet, how the market is going to take the vote. I already outlined what the upside and the downside to the government winning or losing the vote, but how does the market interpret it? Because I think it could be viewed either way, and that's the key. We had one of our guys in the chat room, the Saint, who is a very, very good trader / economist that I've known for years. He thinks that it could be viewed as pound positive regardless longer term, and I think that's probably the case. So pound weakness in the near term might be thwarted. We might see some pound weakness near term, but that might allow for a bounce, especially once we complete this double top. But again, just the important thing to note is that we have this vote happening today, and there's a lot of central bankers that are speaking today that we should also note. We have RBA Governor Lowe is speaking, Draghi is speaking, Kuroda is speaking, Powell is speaking. So, this is all, at the ECB forum. So you're going to have a lot of central bank panelists that are speaking here very shortly, which, could elicit some volatility in the FX market moving forward. So Steve, I left you a ton to talk about. I just really wanted to cover the cable closely today because of this very important vote that we're faced with.
Can you go another 17 minutes until halftime?
Yeah, no kidding. Yeah, I know. This is a pretty important game. Hey, what other games do we have today? We have Spain later today, right?
Let me check, because as you know, these days I've been so busy I have the TV unmuted, all day long. So whenever I can, I have a glimpse of what's happening. But I think we have
Spain, Iran. David said. I think,
actually, right? We have Uruguay with Saudi Arabia following next, and then we have Iran. With Spain. It should be easy wins both for Spain and Uruguay, because they are far, far superior, from their opponents. So theoretically speaking, we don't have any interesting match following this one today. I mean, one way or another, they should comfortably win the equivalent games. So not any kind of a derby or whatever.
Got it. All right. Well, I'm going to pass it over to you, Steve, and thanks everybody for being here. Thank you guys for all your support. Remember, visit our sponsor, Forest Park FX. That's Forest, like trees, Forest Park FX. You can visit them through our site. Steve will show you our site and how to get a hold of them. I'm
showing my screen.
You just go to our homepage, and then
and you can go to our reimbursement program.
Yeah. And you can
you'll
learn how to
find
get ForexAnalytix for free. I mean, that's, you know, bottom line. If you're not in the United States, and if you're in the United States, you know, they can at least help you find a good broker that'll suit your needs. So thanks, everybody.
Absolutely.
Thanks, Steve. Thanks, Dale. And have a good interview today. And good luck today, everybody trading the cable.
You too, Blake.
Thanks,
Bye-bye,
guys.
Blake.
Hey, Steve,
Dave.
you won't miss
How have you
anything.
been?
That football, there's not a lot of scoring, so you could probably analyze the markets for a while.
You know, not having a lot of scoring is also what makes it interesting, right? Plus, you know, it depends. I've watched games that, you know, ended 0-0.
Yeah, and they were great games.
They were great
Defense.
games. I mean,
Defense. Yeah.
No, not really. Actually, I've watched games that were 0-0, and they had a lot of scoring chances, and the ball was actually going up and down all time. But you know, just didn't happen to get a score. And I've actually also watched games that you might have gotten like 3-4 goals scored in total, and they were actually boring games. You know what I mean? So
Yeah.
you know, how many goals are scored is not a de facto criteria for you know, judging a match being interesting.
I know. You don't judge it till the game's over because you need confirmation as to whether it was a good game.
That's a good one.
You wait for the close, even in soccer. All right.
Okay.
So
I want to address. We have. I'll tell you. I think we have some interesting setups. There's no question about it.
Okay.
But before we do that, I think that you would be best to address. We have a question from Joshua. I don't know if you've seen it in the question box.
Okay.
So you want to address that? You know, because you know you also have many years of experience, etc. So I think you'll put it better than I would.
Joshua, you know that hedge fund guys do cartwheels doing 25% a year. So if you could do 50% a year on your money, you're really doing well. So you can't trade you could trade, but I wouldn't put the pressure on yourself because you'll over leverage to try and pay for your cost of living trading with $1,000. What would you have to do? Triple it every month?
Yeah, which is impossible.
So, you know, yeah. But it doesn't mean that you can't start learning so that you're better when you have more capital. And I think there are other prop trading firms that'll give you, I'm not real familiar with that niche. I've never done it, but you may want to check out other prop trading firms. Caution being, you know, no one does this for free. They normally have some type of, you know, program they put you through that's going to cost you money. So look for a prop trading firm that's going to give you a shot with, in fact, I think Top Step Trader is starting one. But then again, you have to go through a program, but they supply, I believe, all the capital if you prove yourself on a demo. So there's millions of shops out there, just buyer beware. Okay, buddy? And if we could help you and you learn here and you become successful, that's a victory for all of us. Okay? All right, Steve.
Absolutely. So let me first go through a couple of charts that I think are interesting. One of them is definitely gold. Gold broke down from this pennant. I'm also monitoring this descending channel. I do think that, you know, the area between 1265 and like 1255 is quite an important area. I would still not exclude a move higher from here. I mean, after perhaps we reach one of these levels. But definitely, I think that unless we get a break above this channel again, you still need to keep looking lower. Okay, now silver is once again approaching. You can see how important this triangle is. Silver is once again approaching this confluence of supports. Call it around 1615. You see, it's a horizontal area of support, and you know this triangles ascending trend line support. So silver also approaching support. Obviously, a breakdown below there is going to be like a major development, but we're not there yet. One more thing that I forgot to say before, having to do with crude oil, like maximum a couple of hours after the webinar, we're going to be releasing a new blog post. It's free to read. You can just go to ForexAnalytix. Okay, and for those that don't know, ForexAnalytix is a homepage. You can go to blog, and you'll find our blog here, and it's free for all to read. I mean, you don't need a subscription for that. So we're going to have a very extensive blog post having to do with what we think is going to follow with having to do with crude oil. It's going to be a blog post that will analyze the crude oil market from multiple approaches, as exactly we like to do. I mean, from basic technical, from macro viewpoint, from an Elliott wave viewpoint, and from a harmonics viewpoint. So you might want to check that out. We're also going to tweet it out. So I'm not going to go through analyzing crude today, because, as I said, you can read that blog post when it comes out within a couple of hours. And I want to address actually a couple of other of the metals, which I think are quite important to see. First of all, one of them is palladium. Palladium has broken down from this ascending channel, and I think that this will likely bring another leg to the downside. I had warned about that. At the very least, I would expect another retest of this ascending trend line. You can see it here, how important it is, which roughly comes at $940 at the moment. Another one is platinum. Platinum, if you remember, we were monitoring platinum very closely for a potential break higher, and as you see, that actually failed, right? And what happens when you have potentially breakout coming and it fails? You see what happens. We had a very big move to the downside once again, and we're currently testing confluence of supports. We've already broken below the previous low at 870, so definitely platinum remains under pressure. I think that if it fails to produce some kind of a response from this confluence of supports, those are very bad news. The RSI is also breaking down once again, so that's why you actually need confirmation. I mean, on a daily closing basis, we never broke higher, but if you were trading it intraday here, you could have easily got trapped being long at the worst possible point. Now, another thing I wanted to show, because I forgot to do the other day, I've been extremely busy with the new site lately, so I haven't been spending so much time here, is the fact that copper produced a very nice head fake, because we were very patiently waiting for a break higher from this consolidation, for another leg higher to unfold, and we did get a decisive break to the upside. But in essence, what this created was more or less a double top, because then we failed spectacularly, and as you see, within like less than a couple of weeks, we are back down to the 3 level. I do consider this quite a bad omen, but 294 remains very critical level for the bulls to hold. So unless we break below there, I think that probably remaining neutral is the way to go. Definitely, though, the fact
not Boons, copper, Dr. Copper.
Dr. Copper, yes.
Yeah, you call them Boons, but
really?
Boons doing the same thing, maybe.
Let me check. Sorry, I didn't realize. I don't know why. Okay.
Your head's in the game. Oh, okay.
Nah, I'm not even watching it.
Okay.
I wouldn't be able. So the Boons, actually, speaking of them, Dale, do exactly what we expected. I was expecting a rebound from the Boons from the 61.8. That actually didn't come from the 61.8. It came from the 78.6. But okay, more or less the same story. So what's of interest now is what's going to happen if we can actually retest this long-term resistance, triangles resistance, you can call it. You can see here how important that is. Personally, I more or less doubt it. I think that Boons are in some kind of a choppy consolidation. So I would think that breaking above the 162.50, 162.70 area is not going to be that easy. So expecting one more leg to the downside, or at least some kind of a prolonged choppiness something like this is likely. So I would more or less caution, that we need to be more patient here. Okay. Now, on the other hand, I think that treasuries, and we've mentioned treasuries multiple times, both Greg and I think that treasuries are quite more clear. I mean, we did get a strong move higher from the bottom of a descending wedge. We came down, we retested this. We've been rebounding. We're currently finding resistance at the horizontal support resistance area, but I do think that the likelihood of a push higher from here is quite high. So I do still think that we might see another leg unfold to the upside before seeing more weakness. Regardless, we have to acknowledge that we're currently on resistance. So in the very short term, I would be a little bit careful here. But if we do clear this level, I think that we are headed to at least a retest of these two highs here, just above 121, if not even higher to retest this. You can see how important this was. A double top, double bottom area, this support area that might act as resistance. It acted as resistance actually here, might act as resistance again if we rebound.
I think we'll need an index sell-off for the catalyst to take it up there.
Most likely we would. That is why I wrote to the chat room like a couple of hours ago, perhaps less than a couple of hours ago, that today I got rid of the other half of my long position in the SPX, taking advantage of this rebound. I was long a full position from 27.20. I got rid of half of it at 27.85, and I got rid of the other half of it roughly where the market is at the moment today. So, okay, that was a good trade. Actually, I had 3 good successful trades that helped me this month overcome the losses that I had to incur from the half remaining position I had long the Euro USD and the quarter of a position I had long the cable and the quarter of a position I had short the DAX, which actually the DAX produced some very, very tricky moves because I was actually viewing this as a bear flag, and then it produced this kind of a candle, and then it completely reversed and came down once again. Regardless, in the meantime, I had been stopped somewhere there. So at least, I had 3 good trades that helped me, be profitable during this month as well, for the time being at least, despite having those trades that worked against me. Now, a few other things that I wanted us to check is very briefly to say that I still remain bearish the Aussie, but since my initial target for a breakdown below this bear flag was the confluence of supports here at the 127.2 extension, which is also horizontal support resistance area, roughly at 73 cents, 73.30, and we're getting close to that. I would caution, as you see, that's exactly what I had drawn here. I would caution that selling the Aussie down here probably doesn't make much sense, right? Because where would you place your stop loss? So I'm not saying that it won't produce more of a downside, more of a follow through, but I think that from this point on, shorting a rebound is the way to go, and not trying to chase this market lower. Kiwi seems to be at an earlier stage here. As you see, Kiwi just yesterday broke below this pennant, and today it's testing once again like this horizontal area of support. So I do think that Kiwi has more downside left, but I doubt it that it's going to be easy for the Aussie to produce some kind of rebound and Kiwi to not. So if actually Aussie wants to rebound rather soon, perhaps Kiwi equivalently will rebound from somewhere here, come back, retest the broken pennant as the broken pennant support as resistance, and then perhaps produce one more move to the downside. Okay. Now, situation with Aussie yen breaking below the bear flag. So this one seems to be about to accelerate lower. Obviously, for that to happen, and which means in comparison to the Aussie USD, it means that we would have to see some more yen strength here. It is likely, but as well as you mentioned before, with having to do with what is required for the bonds, for the treasuries to rebound higher. In this case as well, we would require to see more weakness here. We would require some risk of likely coming through, and the Kiwi yen once again having broken below the 76 area. I wouldn't be betting that this one is going to be proving to be a false break as well as the previous one did. So I would be quite cautious here, trying to fade this move to the downside. Now, we had a question about the USD ZAR, so let's have a look at it. And I think we can have a look at, many of the exotics. Now, first of all, USD ZAR tagged the 78.6 to the pip. Okay, we did have an overbought RSI. I do think that this is going to be the beginning of some kind of a pullback. But for me to say that the move higher is over, I need to see a lot more. So I want to see what a pullback will bring. The first area of support you should be monitoring for is the 1340, 1342 area. Below that is actually like the 1312 area. And only if we see an acceleration lower from there, we can consider that this move higher is over. Okay, so I do think that initially we have to consider this a corrective move to the downside, because even if the whole move higher proves to be corrective, it might still have one more leg to go, right? So we need a little bit more evidence here. Now, having to do with the rest of the exotics, because I think the vast majority of them are quite interesting. USD MXN, as I was also repeating yesterday when we were having this discussion with Blake, USD MXN, if you remember, I agreed strongly with him that it's one of the best candidates to actually see finally some weakness. Keep in mind that it's currently about to test this ascending channel support. So if we do break below here, why not? We might see quite a lot more weakness. We might actually make it down to the 1990, 1995 area. As you see, that's quite an important area of resistance that might act as support in this case. USD Turkish lira, no surprise here. It remains, the Turkish lira remains one of the weakest exotic currencies. As I've said many times, you shouldn't try to fade this. There are better opportunities out there. USD ruble breaking above a triangle, so why not? It might see some more strength. USD Singaporean dollar, last time we checked that, I told you that in my opinion this is currently working out a triangle, and that should be resolved to the upside, and that's exactly what has happened. Currently testing the 38.2 of the last move lower. So so far so good. I mean, it looks fine. Let's see if the 38.2 creates some kind of a reaction, but I do think that you should respect the potential for more upside here. USD with the Chinese yuan, I'm not sure about it anymore, and I'll tell you why. I said when we were consolidating above this breakout here that my target is at 646 because there we have this area of support just a little bit higher. We had the 61.8, but we've now reached that level. So this is the point that I would be a little bit cautious. Perhaps now that I'm seeing it, we have potentially another trend line in play here. Here it is. So this is another area of resistance. You can see it here. So I would be watching this area, because I wouldn't be surprised if it created some kind of a reaction lower. Now, if we do break, actually this is a channel, as you see. So channel resistance, the 61.8 here. It was some previous support in a couple of instances. Actually, we can even move this higher. So as you see, confluence of resistances here. Be a little bit careful. Only if we break decisively above this area, I would be looking for higher levels once again, in which case the next area of resistance is the 655, the 78.6 of the last move lower after breaking below this triangle. Okay. So in the short term, definitely not the place to be buying, but it is what it is. One more thing. we had an incident again, no surprise, with cryptocurrencies. We had another exchange being hacked. I think something like $35 million equivalent was hacked. That's why we're seeing some kind of a reaction lower. As you see, having to do with Ethereum, that actually came when Ethereum was testing this descending channel resistance. Bitcoin still remaining within a descending channel as well. Cryptocurrencies don't look all that well, and actually, Bitcoin is already toying around with a very, very critical area of support. Ethereum, the critical area of support is a little bit lower, in my opinion. It's somewhere between 370 and 400. Definitely low, though they don't look that healthy. So, they're not far away from actually producing quite significant breakdowns. Here is Ripple as well, as you see, more or less the same deal happening with Ripple. So I would be very, very cautious if I was trading those. Let me see what kind of questions we have, and let me address those before we move forward. By the way, we had an early question about CAD Swiss. Let me have a look at it. Dale, we do have an interview today, don't we?
Yes, sir. Steve R. at 45 Trading.
Okay, nice. And what is he going to be talking about? I mean, what kind of class of assets?
FX.
FX. Okay, great. So CAD Swiss. Last time, from what I see, we had a chat about it. I had indicated that there is some kind of a support resistance area here, and the break below that could lead the pair once again. Let me zoom out so you can see how important this formation is. So I had said that a break lower from there might lead the pair down to this trend line once again, and it's underway actually. So I would respect the downside until we reach that trend line, as long as we remain below the 76-cent area. Okay, so as long as we remain below 76 cents, respect the potential for more downside. Question about Aussie, we covered that. I think there is more downside, but I don't think that the reward to risk ratio is to be selling right here, right now. Only after a bounce, the opportunity was there when we were actually testing the bear flags support. Can we discuss the potential impact of UK bill on the pound crosses? I think that actually Blake did that. It can potentially have quite a big FX impact. There is no question about it. Stelios, unfortunately, he doesn't have a good connection because he was prepared to talk about this, and he will definitely try to make it here tomorrow to discuss whatever comes. Now, in retrospect, I don't like to, I like to make educated guesses, and I like to trade events or potential events only in one occasion, and that occasion is usually when I believe that the market is overpricing or underpricing the event of something happening, or when it considers something almost impossible when actually it's more possible than the vast majority of participants expect, or the exact opposite. So in this case, I think we've read a lot of articles. We know all the potential scenarios. I think we should actually just follow the price action. And what does the price action tell us so far? First of all, that we have a very mature move lower. There's no question about it. And I consider this move lower quite impulsive. If you're asking me, regardless of any kind of events, I would not be selling the cable right here. I would actually be looking for opportunities to buy it. Now, would I be actually buying it to see it, like, at some point punch through 144? Not yet. I think that we might see a healthy rebound from the cable. We might finally get to see the 136 level once again. It might happen from somewhere here because we're currently at the 50% fib of the move higher from the post-Brexit low, and a little bit lower from here we have another support resistance area, which is also a very good psychological level. It's the 130 area. Keep in mind, by the way, that just roughly where the 50% fib is, we also have another ascending trend line support coming through. So, in my opinion, not the place to be selling cable anymore, right? I would be selling cable only after a larger rebound. So I don't really care of what's going to end up happening with having to do with any announcements, any votes or whatever. I can tell you as a fact that I wouldn't expect the cable to accelerate lower from here without seeing some kind of a healthy rebound. Can it move? Can it keep dripping lower? Yes, it can keep dripping lower. Do I think that it's easy for it to accelerate and move like another 300-400 pips without seeing a big rebound? I consider it quite hard for that to happen, right? So you want to align yourself with the latest move, which I do. I do want to sell the cable. I don't think you should be doing it from here. Blake, by the way, also showed the other of the pound crosses, so I'm not going to go through them at this point.
Yeah, set up for kind of a relief rally, huh, Steve?
Yeah, I do think so. We have a question from our friend Sunil about the Nifty. Listen, the bullish case scenario with the Nifty is still there as it was and as it is, because if you see, the short-term structure is more or less what you would expect to see or what we've seen with other indices, right? Is it potentially a broken triangle to the upside? It is, but there is also one more interpretation, that we're still within a triangle and it's something like this, right? In which case, we would be having confirmation on a break above there. So we are in some type of a consolidation. I know that Gregor thinks that the vast majority of the indices have a major leg to the downside before moving higher, and it can still be the case because price action is still quite mixed. So let me make it clear. It is still a high probability scenario, but in my mind, the scenario that we're actually going to be moving to new highs from here is a little bit higher. So I'm still tilted more to believe that a resumption to the upside is potentially a little bit more likely. Okay. Regardless, you would want to, if you want to be bullish on Nifty, you would want to expect and see a break above this trend line resistance. Okay, before you can commit to anything more. What's my view on the Euro USD? My view on the Euro USD is equivalent to my view on the pound. I mean, do I think that the fact that we came up to 118.50, I was actually, long from 116.90, I was lucky enough to get triggered, my limit order to get triggered to get out of half of my position, actually 2.5 pips from the rebound high that we saw. I do believe that we can move lower towards the 114.50 area, perhaps even a little bit lower to retest. Let me zoom out so you can see it. To retest this blue trend line, this one, which comes roughly at 113, but I would be expecting a stronger rebound from there, right? So if you're asking me, I think that this move that we've already seen from the highs, the vast majority of it, the easy money to be made being short from there, has already been made. So either from here or from there, I would first expect some kind of a rebound, and then I would consider it again a selling opportunity. Not until that happens, okay? Let me see if we missed any questions. No, I think that was the vast majority of them, because the other questions we've already covered by going through the pairs. Let me not forget. USD NOK and USD SEK, I wanted to show those. So if you remember, I was short the USD NOK. I took profits on half of my short, and then I was out of the money. I actually took advantage of the move lower to get rid of the other half of the position at break even. I still think that the price action here is mixed. Now, there is some kind of a potential for both these pairs, both for the USD NOK and the USD SEK, I'm going to show you USD SEK afterwards, to be forming some kind of a head and shoulders formation. So in which case that would be bearish, but in any case, you don't want to see USD NOK close on a daily closing basis above 820 if that scenario is to play out, and you would definitely want to see a daily close below 8 for that to be confirmed. The equivalent situation with USD SEK, which is, there it is. As you see, We broke below this ascending trend line. We then invalidated it once again. So I don't think this trend line is that much important anymore. So once again here, there is a potential for a head and shoulders formation. This is the only bearish kind of event you can expect if it's bearish, because it can still keep doing this, right? And keep moving higher. So you have to respect the upside as long as we are forming higher lows, because we're still forming higher lows. But if for some reason the failure from here produces more weakness and we come down again to this trend line, and only if that happens, you can see that this can be interpreted as a head and shoulders formation, right? But as
Or
I
a
said,
third drive, Steve. So it either peaks here, or what you could do is have that breakout for a third drive up there, and then back underneath the breakout when it becomes a false breakout would be your entry.
yeah, although if we
Something like that.
decisively, because
I just noticed the RSI, yeah.
yes, but on the other hand, if we decisively see a break above this trend line on the RSI while the
Then it confirms it.
then it confirms it, exactly. So in which case, let me zoom out. In which case, you should be looking for 910 as the next area of resistance, and then 940, right? So as I said, another potential for a head and shoulders formation, but it's very, very early to jump the gun and say that. The only bearish scenario at the moment that seems to be possible is that one, but we would need to see a lot more weakness to even come close to confirming such a scenario. Anyhow, Dale, I don't want to bleed more through your interview if your guest is already here.
He is.
Okay, perfect.
Great analysis, buddy. Go enjoy the game.
Unfortunately, I have a lot of work, but I'm going to keep the TV on mute. Or I might actually put a little bit of volume so I don't miss the replay of a goal.
Okay, buddy. Okay, Steve R.
See you all tomorrow.
Looking forward to meeting you, greeting you. Welcome to FACE at F45 Trading. Steve R.
Hi, Dale. How you doing?
Hi, Steve. Nice to meet you.
You can hear me okay?
Yeah, loud and clear, buddy.
Great. Thanks.
Thank you for joining us today.
I appreciate you having me. It's I've been found your interviews there. I stumbled onto them there a few months ago, and I've been listening there whenever I get a chance ever since. You guys got some great content going, and just wanted to say thank you very much for having me on.
Well, you're very welcome. There is a screen share option if you want to show any charts or a website.
You betcha. I'm just, I've got a few monitors set up here, so I'm just looking at the options here right now. And
there we go.
You can see my screen there? See my cursor?
Yeah, we have the Dixie up here. So I'm always interested, Steve, in how it began for you, how you ended up becoming a trader, getting involved in the industry. I believe you are a signal provider. Bring us back to the beginning. Tell us about the long and winding road to where you are now.
Dale, you're exactly hit the nail on the head there. A long, windy road full of ups and downs. I'm almost into my 40s now here, and I've been actively trading the market now for about 20 years. And I would have to honestly say that the past 15 of those years have been trading very badly. And I basically had I always loved stock markets and trading, and my father actually had a fairly sizable portfolio, and I just on my 18th birthday said, maybe you could teach me a couple of things, and I'll fund an account, and we could do start building a bit of a nest egg. And so I put some money into an account, and it just so happened I had a good family friend who was a stockbroker, and he took that account. And this was back in the the market bull run of the late 90s. And I'll tell you, oh yeah, I mean, hey, you want to trade stocks, that was a great time to be in, because I thought basically anything that I did was the right move, and I was an amazing trader. And then,
yes. A lot of geniuses during the .com mania.
Oh, yeah, you betcha. Well, and the thing of it is, so I live in a part of the world, I'm up in Canada, in Western Canada, and we're very, very heavily oil and gas related in our industry. And so there was a lot of money to be made as well, too, in a lot of oil and gas. And long story short, that family friend of mine did an amazing job with my portfolio. And, as a very, very young kid, I made a lot of money, and I thought I was untouchable. I couldn't do it any wrong. And then he ended up leaving the business, and the next guy came in, and he, did what he could do. And again, he sent me some ideas, and I said, yeah, buy. I didn't even really understand the concept of going short at that time or anything like that. I just thought all you did was buy these markets because they just keep going up and don't have any, top side to them. And so I had worked with him for a little while, and he eventually left, and the next guy came in, and he just basically got me into every single terrible pump and dump stock he could possibly find. He sold me on it. And brokers, I mean, nothing against them, I'm sure there's a lot of great ones out there. This one was particularly a bad one, and I'm pretty sure that a lot of these companies had just paid him to get his clients in there and take their money from them. And that's exactly what happened. So my sizable account went down to a fraction of what it was. And at that point, I realized, and this was, my late 20s, at that point, I had realized that if anybody was going to manage my money effectively, it was going to be me. And so I better start actually learning how to trade. So that's where the journey began. I had sourced out.
I really believe that's why we had the explosion in trading education, because people wanted to become self-directed after living through two drawdowns in 2000 and 2007-8. So they said the same thing to you, even if they were diversified, had some bonds, had some stocks, had little cash, they still got hurt and didn't even want to open up their brokerage statements for years. So millions of people went through what you've gone through. So did you have any teachers after you decided you were going to learn how to trade? Any mentors or books that were a big influence on your learning curve?
Yeah, well, my journey began. I had really followed the teachings of in the books of Robert Kiyosaki, and he ended up he just had a great concept of the how to actually move money around in the different quadrants of cash flow and everything else. And I really took to that in the beginning, and so he offered a program, a very expensive program that I looked into, and I thought, wow, this is exactly what I want to know. It was, stock trading 101. It was an introduction into futures and commodities and, hedging programs and things like that. So I delved into that for a few years, and I learned, how to use, indicators, RSIs, MACDs,
Well, you don't use them anymore.
I don't rely on them. Every now and then I'll put them up on my charts. And basically what ended up happening, Dale, was I took that training, and I kind of thought, well, this is it. I should be profitable now. I can go out and I can take on the world. And it just wasn't coming to fruition for me. It just wasn't, I would see the setups and I would act on them, but I wouldn't see the continuation in the moves that I was expecting. And so I thought there's got to be something a little bit more to this. And then it was about 3 or 4 years ago, I had stumbled onto Inner Circle Trader, and
Michael.
Yes, yeah. I really took hold of his concepts and poured through his materials, and I really, it's not so much on what's going on in the charts, but it's more so the theory behind what's happening, especially in the Forex markets. Commodity markets, it's obviously still somewhat based on supply and demand, and if there's a crop failure in the southern hemisphere, it's obviously going to affect price, and then that's the supply factor, right?
So Michael's kind of thesis is that the market will gravitate almost like magnets to where liquidity is. Isn't that it?
It's very, yeah. Where are all the orders?
Okay, all right. Where are the orders? Okay.
Yeah.
So what are you seeing here in the dollar index now? We just made marginal new highs after the ECB, and we're stalling out here a little bit. What's your eye telling you here? And what are your red horizontal lines? Is that where the orders are?
Yeah, so with the dollar index, this has been an interesting one. So I, in terms of my analysis and what I look for, I'll trade the majors. I don't do too many exotics, and you know, I mainly focus a lot on commodities as well too, as you can see down here at the bottom of my chart.
Okay.
But what I will typically start my analysis is with the dollar, and then it obviously matriculates down from there. And on a weekly, you know, I'm looking at this thing, and you know, after we came exploding out of this area right here,
Right.
and back up to these levels that you see here, the 95 levels. And I'm actually getting some conflicting data because I've got a couple of different demo accounts that I trade on with, just for obviously my analysis purposes. I do a lot of live sessions, and I only trade in demos when I'm doing those live sessions, of course, as you well know. But I'm getting some conflicting data on it. Some of them are having this, you know, the July contract on the dollar had run significantly up to 95.20. This feed here is showing, you know, just barely breaking the 95 level. And then I've got some other conflicting data, like on TradingView, for instance, where I'll see if I can bring this over here. If you can see this chart here.
Yeah, it took out the stops over that previous high.
A clear run through. That's right. So right now it's at a bit of an inflection zone. If we had been having this conversation last week when the price was down here, I could tell you unequivocally that price was going to pop up from here. This was going to be a very, very strong area of support.
Yeah, I was looking for 92.50. It was a very difficult long to catch because it happened on the ECB.
It did, yeah. Yeah, and
I mean,
so
kudos if you did, but you know, when I woke up here in California, euro was already about 40, 50 lower. You know, I have a hard time chasing things, even women. I let trouble find me, Michael.
Yeah.
You know what I mean? Anyway.
I agree with you
Go
100%. I don't chase trades either. That is actually my philosophy. If I'm buying in a market, I'm going to be buying on a down candle. If I'm selling in a market, I'm going to be selling on an up candle, and there's no chasing price. And you miss a lot of moves when that happens, because sometimes you just don't know. But I'd rather miss a move and keep the positive equity balance in my account versus getting into a move and it was the wrong move and seeing a drawdown. So that's my theory on it. But
okay, so you know, I'm all for people being able to say I don't know or I was wrong, and you know, right now I'm neutral, and I'm wondering, is there something in here, maybe on a longer term basis? You know, I keep coming back to this because you know we are starting to diverge. I know a lot of people looking for 96, 96.20 to 97. But wouldn't it be interesting if we stall here a little over 95 or just above it and then pull back to 91 and then the next time back through 95, you're talking 102. But
right.
you know, sometimes I'll visualize things and maybe we're going to put in a right shoulder here. What do you think?
100%, Dale. And that's so what I'm looking at here is, and I think we'll probably be able to tell here this week going into next. They could chop it sideways here for, you know, another half a week to week easily before making a final decision, which we've all seen that before. And I think we're going to find out convincingly. So on this chart here, it hasn't done it quite yet, but if we do see that reaction, it's just going to be a long wick up here, and then you'll start to see price fall off. This under here, this area right in here at, you know, 93, I would even say more like 93.75. If I can get that up here, that's sort of going to be the line in the sand. If this level gets broken in here, then I believe this double bottom right here is going to be the next target, and then we could, you know, the dominoes could fall off, and I would wouldn't expect price to rebalance until we got back down to this consolidation area in here. So that's my analysis on the the downside. If we do get that run up here on liquidity, we'll see it reject, and then that's where we're going to be headed. But I believe there's some some geopolitical events that are happening right now. Obviously, the trade wars with China and everything else. The Feds came out with their interest rate hikes recently, and more planned later on in the year. That's all, in my mind, that all is going to bolster a stronger dollar, and I believe we're going to see higher prices on that. So, if I go out to, as I was showing you here, on a higher time frame, I could very easily see if that trend continues, and if it does what I think it's going to do, I believe the first target we're going to be looking at is going to be this this green level up here. We're talking about a little bit, but basically the 96.30 level I think is going to be easily taken. And I'll be honest with you, Dale, if you look at this right now, you look what they've done. They've ran price all the way up here just to fall short of these equal highs, and then they pulled back. It was a very, very slight retracement. If you actually take a fib off of this low to this high, we've all done that, so we know the levels.
23%. It was very shallow. That's your point, which which demonstrates strength. Correct. Yeah.
They're coming up here, and they're just hovering under these lows here. And I think this is what they're building in, is a false sense of security up here with a lot of traders. That's right. Yeah, they're all saying that's resistance. It's not going above 95. This thing's going to hell in a handbasket in a big hurry, and I'm getting all over this short. And all they're going to do is they're going to blow through this area, and they're not. And it's going to be another leg like this, in my opinion. That's what I think we're going to see come in here with the strength. And again, it's only because if these geopolitical events weren't taking place right now, dollar typically right now at this point in time seasonally is bearish. It's coming into a bearish point of time. So this should be going down. And you can see, I mean, we're not there yet. So I believe the magician, so to speak, will show his tricks here in a few days, maybe in about a week. I believe they'll finally either run this level or it'll fall out of bed, and it'll be pretty obvious when it doesn't.
You've been a long-term follower of oil, energy, probably miners too, from where you're geographically were brought up in. You have a view on oil here?
Yes.
Okay, go ahead.
So I've been discussing oil now for a very long time. I was a buyer up until about the 68, 69 level. And my last trade on oil was right here. I got into a small long position here, got out, and then it started to chop sideways. And then this is all of a sudden now where OPEC has come in saying there's some grumblings from Russia and a couple of the other major oil producing countries about how they'd like to start increasing production, and potentially we could start to see the market falter. They have come in saying that all of the surplus has been basically extinguished, and that they're back to regular storage levels, and that's kind of why you see this drive in price here the past year. Essentially, it is just them cutting production. So now they're in the OPEC talks right now, and I stopped trading it right here, and I kind of had an inkling that this was going to happen. I didn't know what was going to happen. I didn't trade this down. I don't like to be part of markets that I don't really like to counter trade, basically counter trend trade. And you can see obviously here we're in a very strong bull market. Now, long term, I believe this is going to continue higher. I really, really do. I believe that 74, 75 are easily going to get hit, and I think right now they're just they're doing these talks, and Russia and everyone else is going to come in and saying we want to increase production and bring price around 60 level, which is what I have marked on the chart here. But I think that's just going to be temporary. I don't believe that they're going to hold price and suppress price like they had done, in the past down in these areas back here in 2005 and 2016. I think personally, that they've suppressed price long enough. They came down, they cleared out all of the liquidity under the market from that raging bull market from 2009. And I believe that we have higher prices to come. And you got to look at it, Dale. I mean, think about it. Everything you touch and everything you interact with these days is oil. It's all built by it. It's the entire world runs on oil. As much as any green supporters and solar this and clean energy that want to come in and say that oil is an old dinosaur product and has no use in the world, it's absolutely 100% false. You cannot operate this world and do anything that we're doing today without oil. And the price will only continue to go up. It's a diminishing supply, and as such, the price will go higher. And this is just
wasn't oil formed from old dinosaurs?
There you go, man. It was. Yeah.
So you can't call it. So they're right saying it's an old dinosaur. Bullish oil. Anything on the precious metals, Steve, that you're watching here? Silver had a nice run and then gave it all back with dollar strength, and gold has been under pressure here.
Yeah, I just want to, just before I flip over to gold, if I could, Dale,
Okay.
I just want to let you know, I think in terms of, just to wrap up my analysis on this, I believe this little area right under here that I have highlighted at 60 level, I think they're going to come in and tag that, and they'll probably do that by the end of these talks here with OPEC. And from there,
one more flush.
I believe so, yeah. It's kind of a symmetrical swing that you've got from this level here down to this level here, which would take us sub 60. And then from there, I think we'll start to see the bulls step back in. That's my personal opinion.
Okay.
Now, when
nice view.
we talk about gold, this is obviously tied in with the U.S. dollar. So a pretty simple analysis. To try and save some time here. If the U.S. dollar is going up, more than likely they're going to suppress the price of gold. We'll see further downside. And I've got a level. I actually marked this level out on my charts here a few weeks ago when price was doing this here, and you can see followed through very, very nicely. I don't think the downside is done yet. And I mean, gold is it's kind of one of those things where everyone thinks it should just be going higher and higher and higher and going straight to the moon, and it's not. They're just really, really holding back on price. Unfortunately, we're not seeing the highs that I think it should be at. I personally believe that gold should be a much higher value commodity than what it is, but we're at the mercy of the banks.
We break out over that blue line, it sure will be.
That's right.
Horizontal blue line.
Yeah.
But maybe one more shakeout before that happens to, 1220, 1180, something like that. You have anything down there?
Yeah, right about here, just a sub 12, I believe is 1180, somewhere in right around there, 1185.
That's my level. Well, it's both of our levels. Yeah, around 1180 into the fall.
And especially if we see that expansion on the dollar, if I believe that we do see, even if dollar gets up to 98, then that would be a real strong case for gold to start to collapse down to that level there. So, and then I'd be looking at some kind of a support to form at that area.
Okay. Well, now would be a good time to show your website and talk about what you do and how people could get in touch with you, Mike.
So basically, this is go to our website here. So what I did, we're relatively new. I had found out or found 4 other analysts, including myself, who all trade the same style. So we all have the same mentality. We were all trained by the same gentleman. And we all have a very, very strict trading regimen. So in terms of money management and everything else, and I've brought everybody together, and we offer signal services for our clients and market analysis. We do a lot of free market analysis on YouTube. It's just F45 trading on YouTube. You can find us. It's all for free. And then from there, we have a great group. We have a chat room that people can get involved in, and we post charts regularly. And again, we have a signal service for all of our paying members who want some market direction, some buy entries, sell entries, and everything else in between. And we're doing very, very well. Again, we're kind of in our infancy stages. This was started up early last fall, and since then we've been growing by leaps and bounds, and things have just been great. And I'll tell you, we've got such a great group of traders, and kind of such as like yourself, Dale. You've put together a group of guys a group of people who they're vested in the markets. You know, they watch charts all day, constantly bouncing ideas off of each other, and that's the type of environment that I really think people accelerate in, and you know, they can kind of get their ideas picked over, and hey, here's an idea on a chart, and you know, just a great group of people is sort of what I'm trying to put together. Like-minded, you know, attracts like-minded, and I think we've done a good job of that so far. So you can find all of that at f45trading.com. That's our Twitter handle right there. And I've got another social media platform on Instagram, obviously at Future 45 Trade Signals. But that's pretty much how we get our content out.
Well, Steve, it's really been nice knowing you. I appreciate the views. Sharing your journey with us and some of your outlooks and a few instruments, and wish you continued success with your new venture, and that whoever is in your company, the words that you say bless them and pips rain down on you and all of your membership.
Dale, much appreciated. The pleasure is all mine. And if there's anything I can do for you in the future, please don't hesitate to reach out.
Okay, thank you very much, Mike. Follow Mike at F45 Trading. That's correct, Mike. And that's Wednesday. See everyone tomorrow. Remember, don't just count your pips, count your blessings. Good hunting, everyone. And see everyone tomorrow. Thanks again, Steve.
You bet. Thanks, Mike. Thanks, Dale.
My trading warrior brother, Steve R.